Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at Ironfx. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, the USD was on the retreat yesterday, right?
Yes, the US dollar retreated practically across the board. It was the characteristic move of the market. The driving force behind the retreat of the US dollar was practically the slowdown of the US CPI rates for July. The slowdown was more than expected. Hence, we had an intense market reaction. We would note that the headline CPI rate on a year-on-year level retreated to 8.5%, while on a month-on-month level it retreated to around 0. Prices remained practically unchanged on a month-to-month basis. Now, the slowdown as such enhanced market expectations that the Fed may start slowing down the pace of its rate hikes. It was characteristic as the Fed funds futures, which before the release were providing around a 70% probability for a 75 basis points rate hike. The probabilities after the release started tilting towards a 50 basis points rate hike. Overall, there is though still some time before the next Fed meeting, that would be around the 21st of September. And up until then, we still have a release of a US employment report that would be for August, and the release of the new CPI rates for August. So the big picture, or if you prefer the big question here, is whether the US inflation rates have actually peaked and are on their way down, or whether this is just a temporary recess. It's a big question. Some analysts were quick to mention about the big win of the Fed's tightening moves. However, I would like to see some confirmation in the August rates as well before declaring anything. I would also note that Fed policymakers, on the other hand, seem to remain focused on further rate hikes. It was characteristic that Neil Kashkari, which is the Minneapolis Fed president, yesterday stated that practically more rate hikes are required. And that's an issue given also that Kashkari is a well-known dove. So I wouldn't be so quick to expect that the Fed is going to be slowing down its rate hike path, not just yet.
Okay, and what was be the effect for the US stock markets?
Well, US stock markets were on the rise. All three main indexes, the Dow Jones, Nasdaq, S&P 500, all were in the greens. And I think that exactly this expectation for the Fed to start slowing down its rate hike path may have enhanced the hopes for an improved market environment, which could provide still some investment chances and some profitability chances for the companies. And overall, that tended to provide a more optimistic mood for the US stock markets. Yeah.
And what's on the calendar for today?
Well, we have the US PPI rates. They are for July, and they are expected to slow down considerably on a month-to-month basis. Something which would be practically in line with the slowdown we have seen of the US CPI rates, and would also be implying that practically the inflationary pressures in the US economy may be more or less having less depth than what was initially considered. I would also be highlighting you out tomorrow in the Asian session, New Zealand's PMI. That would be also for July. Should the reading drop, mind you, it's already below the reading of 50, marking a contraction for the month of June. Should the reading drop also for July further, that would be implying another contraction for economic activity in New Zealand's economy, and that would be an issue which could weaken the Kiwi.
Moving to energy, how have oil prices been behaving?
Well, oil prices rose yesterday, even slightly. Overall, the picture of WTI, though, remains of a rather stable sideways movement near $90 per barrel. There are a number of fundamental issues here which are in play. On the one hand, we had the EIA and the AP weekly crude oil inventories figures, which showed that the US oil inventories rose over the past week. And that was definitely not a plus for oil prices. Also, I would be noting that last Friday we had the Baker Hughes oil rig count, which showed a reduction of active oil rigs in the US, another sign of slowing demand. On the other hand, though, we had a very, very substantial drawdown of gasoline inventories, which tends to imply that demand for gasoline is higher than what was expected. It has surpassed production levels and may be forcing refineries to intensify production levels. So that could drive demand for oil higher. Also, I would be noting that the weakening of the US dollar may enhance the price of the US dollar denominated commodity, i.e. oil. Other than that, I would also be highlighting the release of OPEC's report that's for today. And should the OPEC report more or less imply that demand levels may increase very slightly, that could practically weaken oil prices. On the other hand, should the report also show expectations for a rather tight production level, that could support oil prices. The other issue which could come into play for oil would be the Iranian nuclear deal. Over the past few days, there were news and headlines that it seems that the Iranians and the US government are nearing a deal, an agreement about Iran's nuclear program. And should that be actually verified and signed, could reintroduce Iran into the global oil market as a major supplier and could weaken oil prices. Other than that, we have practically renewed flows of oil from Russia to Europe, and that tended to ease concerns of the oil market for the production side and the supply side in general. And that should be it for oil.
Is gold price on the rise?
Gold's price had a peculiar movement. Actually, gold's price rose as was expected due to the weakening of the US dollar, yet corrected during the late American and Asian session today far lower and reached practically the same levels it was before. While other trading instruments more or less maintained their strength against the US dollar, gold did not. So we are seeing gold stabilizing around the same levels, even having some slight bearish tendencies.
Any final comments, Peter?
I would like to see how the American session is about to open. Should the positive momentum which was created yesterday in the US stock markets being maintained, we may see the US indexes being on the rise once again. On the other hand, we may see the US dollar, which despite a correction higher is still quite vulnerable. And we may see the releases, especially the weekly initial jobless claims figure, hurting the dollar should the reading rise.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. In front of your screens, you're having the USD index. It's the 4-hour chart, as are all the charts which are to be presented, unless otherwise stated. Now, making a start with the US dollar, we see that there was a drop yesterday of the USD index, which reflected practically the weakening of the US dollar. And the index dropped, breaking both the upward trend line, which was guiding it since the 2nd of February. Let's have a look at it. Here it is. Testing, 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 break. And it also broke the 105.50 support line. Now, we tend to maintain, despite the current stabilization of the USD index, we tend to maintain some bearish outlook for the US dollar. And the main reason why is A, the fact that despite correcting a little bit higher, it dropped again during today's European session. And the second is the RSI indicator. The RSI indicator, which is currently at the reading of 30 almost, which tends to imply a bearish outlook. At the same time, though, I would like to note that the price action dropped yesterday, breaking the lower Bollinger Band. It was an intense drop. Corrected higher, came within the Bollinger Bands once again, and it's actually flirting with the lower Bollinger Band once again, which may slow down the weakening of the USD index. So as we have already described the movement over the past 24 hours and seen what the possible direction could be, let's have a look at the support and resistance levels. We definitely have to reverse the role of the 105.50 support line into resistance line. And we have another one at 99.50. Let's have a look at it. So the 99.50 was aimed for here. Nope, it's 97. The 99.50 was a prior resistance layer here, and was tested also as a support line here and here. That was around April, beginning 6th to 8th of April this year, and around the 12th to the 13th of April here. Okay, let's make the readjustments. 1, 2, 3. Let's correct the labels. And we start with the low side going upsides. The new final support line will be the 99.50. Second support line being placed at 101.25. Third support line being placed at 103.45. First resistance line being placed now at the 105.50, which used to be a support line, but given that the price action has broken below it, reverses its role and becomes from a support line a resistance line. Second resistance line being placed at the 107.20. And the final resistance line now being placed at 109.10. Let's plug this in. Now I see that Some of you guys here are suggesting the possibility of a sideways motion. Could be. It could be. And in such a case, I wouldn't be surprised to see the US dollar remaining between the 105.50 and the 103.45. Should the bears take over, I wouldn't be surprised to see the US dollar index dropping, breaking possibly the 103.45 and aiming lower. On the flip side, should the bulls be in charge, which is a remote but still possible scenario, and we would have to cover it, we would expect the price action to break definitely the 105.50 and actively aiming, if not even reaching, the 107.20. Okay, let's have a look now at Eurusd. Eurusd, which has been on the rise, definitely due to the weakening of the US dollar. Note that the pair almost reached for the 1.0380 resistance level. It stopped short of it just a bit, corrected lower, and interestingly enough, the 1.0275 provided support and the pair bounced back up again. So this is a valid level which has been verified, only this time not as a resistance line like here, but as a support line. So we are reversing this into a support line, changing the color from red to green. Let's go hunting for a new final resistance level, which should be somewhere here. Let's see that. Yep, that's it. That would be the 1 point in red, please. 0610. Let's widen. Beautiful. Let's make the readjustments of the levels. I know that they're not exactly symmetrical, especially between the S1 and the S2, but symmetry is not the aim here. Now, if someone could discuss the possibility of a mid-level somewhere here, possible. But I would like to keep the S1 and the S2 describing the sideways motion here, this wide sideways motion. Okay, so let's correct the labels. Parallel level becomes the S3. The S2 is being placed at 1.011. First support line used to be resistance line. Now that the price action has moved decisively higher and has proven its worth as a resistance line as well, is now being placed at 1.0275. First resistance line is now being placed at 1.0385. Sorry, 1.0380 that is. 5 pips difference here. Second resistance line being placed at 1.0485. And final resistance line being placed at 1.0610. Let's lock this in. Sorry. Here we have it. So we expect Eurusd to maintain some bullish tendencies. I would like to see practically the next high being higher than this peak here. Practically the pair to test the 1.0380. It did not. Nevertheless, should the bulls take over, I wouldn't be surprised to see the price action breaking the 1.0380 and start aiming for the 1.0485. Note how the pair corrected lower after hitting the upper Bollinger Band, which may be a sign that the rise may be slowing down. At the flip side, on the same note, furthermore, I would be noting that the RSI indicator, despite correcting a little bit lower, remains pretty near to the reading of 70, implying a bullish sentiment. On the other hand, the fact that the next peak was not able to surpass the previous one, it's actually lower, would be implying some stabilization for the pair, in which case we may see the pair remaining in the spectrum of the 1.0380 and the 1.0275 support line. Should the bears take over, we may see the price action dropping, breaking the 1.0275 and the one aiming for the 1.0110 once again. Please note that, and it's a little bit important to mention, that if we drill down to the daily chart, the price action seems to have broken the downward trend line, which has been guiding the pair since the, let's have a look, 10th of February. All this downward trend line seems to have been broken. So the euro is slowly rising. It remains to be seen whether it will be steadifying somewhere in this region and start rising once again. Drilling back down to the 4-hour chart. There you go. Let's have a look at table. In a very, very similar movement, cable has risen, given the US dollar weakness, has broken the 1.2185 resistance line. Interestingly enough, it had a similar movement like the euro, where practically the pair dropped, yet found support on the prior resistance line. So this would be turned into a support line pretty quick. There you go. Let's go hunting now for a new final resistance line. I would be placing it somewhere on this peak here. I would prefer this peak as we have one touch and second touch here. Also support level here. Next one could be higher. Okay, let's do that. It's going to be red. And it's, let's see if we can go for around 1.26. Yep. Adjusting. It could go a little bit wider. Let's take this peak here. $1.2660. Yeah. Let's make also the necessary corrections in the labels. Starting with the final resistance line, support line, which is now being placed at 1.1935. Second support line being placed at 1.2070. Third support line is now being placed at 1.2185. First resistance line is being placed at 1.2330. Let's have a look at the validity of the R1. Now we have a peak here on the second, which is actually pretty valid. Yeah, and then that's being followed practically by a former support line, multiple touches, and the peak. Okay, I'm doing this. So we have the 1.2480 as the second resistance line. And finally, the 1.2660. That's it. So we may see the pair stabilizing somewhat. On the other hand, the RSI indicator corrected just a bit lower. It's between the readings of 50 and 70. Actually, it's at 60. And that could be implying that the bulls are still around. Yet on the other hand, we may see stabilization of the pair. And I wouldn't be surprised, and that's another question, whether we could have a resistance level here. Note the double touch here and here. And that would be the 1.2280. Yep. I'm going to be scrapping. Here's one, placing it here. As there's three, and that would be at 1.1755. And now the picture changes, doesn't it? That's 3, 1.1755. Let's lock this in. 1.1935 becomes the S2. And the 1.2070 becomes, sorry, the S1. So a sideways motion seems to be prevailing, and we expect that the pair would be maintaining its price action between the 1.2880 and the 1.2070. Should the bulls take over, I wouldn't be surprised to see the pair rising, breaking definitely the 1.2280 and aiming for the 1.2480. On the flip side, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the 1.2070 and aiming for lower grounds. For the time being, our expectation is for the price action to remain in the area between the 1.2280 and the 1.2070. It's a range of around 200, 210 pips. That's more than enough to maintain the price action within it. Let's have a look at Safe Haven USD JPY and how it moved. Okay, we have a wide drop here. Let's delete the mid levels. Okay. So I think we need some readjustments here. We're definitely going to be placing a resistance line here. That's one. Support line to be readjusted. Practically what I'm doing is that I'm widening. This is valid, and this is valid. Okay, let's set them once again. 1.3940. $137.45. And now we're placing this at 135.55. So those should be our resistance lines here. Let's have a look at the support lines. We make a start with the 137. So it's 132.37, the first support line. The second support line being placed at 130.35. And the final support line, let's have another look at the validity of it. Could be a little bit higher. 128.20. Okay, let's readjust. There you go. So, for the time being, we have a sideways movement between the 135.55 and the 132.37 after the readjustments we have just made. On the other hand, the RSI indicator remains pretty low, near the reading of 30, implying that the bears are still present and some bearish tendencies could drive USD JPY even lower, breaking the 132.37 and start aiming for the 130.35, a level which was able to successfully reverse the downward motion of the pair, which had started on the 27th, with the reversal taking place on the 2nd of August. Now the upward motion has definitely been broken now, and that tends to imply a possibility of a sideways motion, if not even a bearish one, to the downside. Nevertheless, should the bulls take over, I would expect the price action to rise, aiming, if not breaking, the 135.55 resistance level. Yes, there could be also, yes, There could be a mid-level somewhere here at 134.35. Let's have a look at the other safe haven, that would be CHF. Okay, the downward movement is being maintained and has intensified. Let's correct this to a resistance line. Could be a little bit lower here. New, new support line. Oh, oh. Back hunting. Readjusting. 91.95. Sorry. So, once again, let's correct the labels as well. And we make a start with the R3, the final resistance line, which practically rests on these peaks here. It was a double peak, interestingly enough. 0.9640. Second resistance line being placed at 0.9550. First resistance line being placed at 0.9455. First support line now being placed at 0.9375. Second support line being placed at 0.9285. And final support line being placed at 0.9195. Let's lock this in. We maintain our bearish outlook for the pair, given that the RSI indicator is along the reading of 30. So I wouldn't be surprised to see the price action breaking the 0.9375 and start actively aiming for 0.9285 in the next 24 hours. On the flip side, should a stabilization occur and 0.9375 holds ground, as well as the 0.9455, we would expect a sideways motion between the R1 and the S1. For a bullish outlook, we would require clear breaking of the 0.9455 and the price action to start actively aiming for a 0.9550, possibly also breaking the downtrend line here. Okay, let's have a look now at commodity currencies. We make a start with USD CAD. USD CAD has dropped, and in my opinion, this peak here would be the new resistance line, and that would be the 1.2790 in red. Let's go hunting for a new support line. There we go. Beautiful touch. And that would be 1.24 support level. Readjusting. Second support line being placed at 1.2520. First support line being placed at 1.2685. First resistance line being placed at 1.2790. Second resistance line being placed at 1.2945. And the final resistance line being placed at the 1.3075. Similar movement in the reverse, yet the outlook differs given that we have one peak, another lower peak, and another lower peak. So we may see the USD index, USD CAD dropping, aiming for the 1.2685. Given also that we have the RSI indicator near the reading of 30. Let's have a look now at AUD USD. It's interesting how the price actions are very, very similar. It shows us how USD led they actually are. Let's go hunting for another resistance line. Yeah, all the peaks, all the testing here. And that would be the, in red please, mm, 0.7195 with the final peak being at 0.72625. Sorry, that would be 0.7280. 82. Okay, let's widen this. We're adjusting. Zero point 7285. 0.7195. 0.7135. 0.7045. Now it's getting narrower. Much narrower. 0.6995. And 0.6945. So for the time being, we tend to maintain the view of some bullish tendencies. Given that the RSI indicator is running along the reading of 70, that's an issue. And in which case, should the bulls maintain control, I wouldn't be surprised to see the price action rising, breaking the 0.7135 and start aiming for 0.7195. Also, there could be 1, 2 upward trend lines. It's characteristic how steep the upward slope was practically from the release of the US CPI rates for July. On the flip side, should a stabilization be present, we may see the price action breaking the second upward trend line and maintaining the price action between the 0.7135 and the 0.7045. Should the bears take over, we may see the price action correcting lower, breaking the 0.7045 and start aiming for the 0.6995, which used to be a resistance level, but given that the price action is above it, has now turned to a support line. Let's have a look now at NZD, or even better, let's have a look at gold. Gold, which rose, yet corrected lower. And it's back in the range between the 1793 and the 1760. Now, you mentioned that there is also a possible level at 1785. Let's have a look at that. Oh yeah, I know what you mean. I would place it even a little bit lower. I would place it somewhere here. 1782. 83. So we get the touches. Yep. But that would be a support line. And we have one test, support. Seems good. Okay. I'm keeping that, but given that we have, yes, this could also be the resistance line, a little bit lower. That would be the 1812. We need to find a new resistance level. Let's go. I would be marking these peaks here. That would be at 1875. In red, please. Let's make the necessary adjustments. $1,760. $1,740. Now, practically gold's price, as it has broken the upward trend line guiding it since the 21st of July, with switch or bullish outlook in favor of a sideways movement initially, most probably above the 1783, yet lower than the 1812, which the precious metal aimed for yesterday, yet was not able to reach. Other than that, should the best take over, I wouldn't be surprised to see the price action breaking the 1783 support line and test the 1760 support level. Note how it was tested once again here and here. From all of us here at Ironfx, that should sum it up for the day. We wish you solid trading.
everyone, my name is Emily and welcome to our daily trading tips. Tom Next, which stands for Tomorrow Next Day, is a short-term Forex transaction that enables traders to purchase and sell a currency at the same time over 2 different business days, tomorrow and the next day. The goal of Tom Next is to allow Forex traders to maintain open positions overnight without having to take physical delivery of their currency. The reason for Tom Next trades is that the majority of currency traders do not want to take delivery of the currency but want to leave their positions open and to be rolled over daily. In Forex, after any transaction, the expected delivery is 2 days. This is also known as the spot date, but Tom Next can be used to extend the trade beyond this date. This simultaneous transaction is an FX swap, and the trader will either pay a fee or profit depending on the currency they're trading. In this sense, Tom Next allows traders to extend their position, and the trader's Forex broker swaps any overnight positions for an equivalent contract that begins the next day. The difference between these two contracts is what is known as the Tom Next adjustment rate. This adjustment up or down will be applied to the opening price of your next day position. This is why you'll see a small difference in the opening price of your trades from one day to another. Your broker will either charge or credit your trading account based on the interest rate change. If you are buying a currency with a higher interest rate, then your broker will pay you an interest payment. But if you are buying a currency with a lower interest rate, then your broker will take interest payments from your account. This payment is also called the cost of carry.
Today is a little bit weird. The video is not working, although it really would have been great if we got the video working, but it's not. I'm doing well. Thanks for the video is work. Yeah, the video is working, just that the our webcam is not working. It's a little bit weird, right? But yeah, thanks for tuning in, guys, right? Nice to see a whole bunch of you guys here. We've been waiting to learn Fibs. That's great. In today's session, right? We'll be learning about Fibonacci Retracements. Nice to see you guys tune in nice and early, right? Bear with me for today's session. Yeah, there's not going to be any webcam because for some reason there is something that is running that is not allowing me to use my webcam. Just let me see. I'm going to just spend. Maybe going to spend 1 minute, see if I can figure out what is the funny thing that is running that is not allowing me to use my webcam. Let me see, why is my webcam not running? This is so weird. Yeah, it's so weird. Yeah, the video is not working. Can't be here, right? Can't be here. Okay, looks like it's really not working today. It's quite an interesting case, but no problem. Let's begin today's session, right? Yeah, I've allowed webcam, right? It's I think maybe it's Cass using a voice changer, so she can't. No, it's not Cass, right? In fact, today is gonna be Annabelle. Right, Annabelle will be doing a Fibonacci retracement series, right? You'll be able to see her profile up pretty soon, right? But yeah, it's I know there's a big demand for us to set the webcam up. My goodness, I have no idea, right? The only way that I could get it up is if I restarted the computer, but I don't think you guys would want me to restart the computer, right? It might have a little bit of a delay. Not sure if you guys are fine with that. Yeah, but the only way is if we actually restarted the computer. So let's do today's session without the webinar, without the webcam, okay? All right, now let's begin today's session. Let's begin today's session, right? And today's session will be, I'll be using my handy dandy pen over here. Right, today's session, it is the first of 4 sessions on Fibonacci retracements, right? Fibonacci retracements, right? This is a 4-part series. We're going to do retracements, we're going to do extensions, right? We're going to do expansions, and then we're going to do projections, okay? The amazing thing about this is that once you complete all 4 of it, right, you'll be able to find very, very accurate reversals. Reversals is like a contrarian style of trading, meaning that usually, you look for a trade, when it hits a key level, you can play the reversal. Okay, so this is one of the hallmarks of Fibonacci. It's a market, it's a leading indicator, right? So we know there are lagging indicators like moving averages, right? Moving averages, even stochastic RSI, right? Those are lagging indicators, right? Leading indicators actually forecast for you in the future what's going to happen. And even though it's actually Fibonacci, it's a very, very great way of forecasting this, just that when people are using it, they tend to use it wrongly. It's very, very hard to master it correctly. There are a lot of rules to use it correctly. Which retracements do you use? There are so many retracements to use, then there's the extensions, expansions, projections, right? How do you draw it correctly? Right, all these questions, we'll be answering them today, right? Annabelle will be answering them today. It should be showing you a very, very detailed explanation along with some examples later, okay? Now, as we proceed to today's webinar, a few key things to take note of, right? Disclaimer, guys, disclaimer. Remember, everything in this webinar is educational in nature, so nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade, all right? And a few important links that I need to send you guys to. Okay, let me just pull it up over here. Ironfx.com. All right, yeah, it's Ironfx.com, right? So a few important places that I need to point you guys to. Webinars, right? We got webinars, we got past webinars, and we got podcasts. Okay, so in tomorrow's session, it'll be a live trading session. Tomorrow's live trading session will be done by Cassandra, right? Yeah, tomorrow's live trading session will be done by Cassandra. So if you can, not today, yeah, tomorrow live trading session will be done by Cassandra. You can tune in for her session, right? You also watch her use, you also be able to watch her use, what's the word for it? Fibonacci quite extensively there, right? Yep, this is Cassandra. I'll be seeing her tomorrow. For the past webinars, right? In our presentation, you'll notice that when we're doing Fibonacci, we actually combine it with a lot of support and resistance, trend indicators. Last week, we covered multi-time frame, right? The previous week, we covered advanced moving average strategies, right? If you want, come into the past webinars, click this button here, English, right? And you'll be able to see all the previous webinars that we did. All right, I recommend that, anytime you come across something which you are not too familiar with, right? And or maybe there's a certain term you're not too familiar about, come here, right? And you can watch the previous webinars, okay? Now, the last thing that I want to let you guys know, we are going to officially launch it in the next, probably the next week. Oh yeah, it's supposed to be launched next week, but for those of you guys who are here, right? You can sign up for it earlier. Head over to vip.ironfx.com. Okay, it's a nice place, right? From next week onwards, they're going to introduce a minimum deposit size of, if I'm not wrong, it's $1,000, right? $1,000 to get access. So if you can, go get your access now, because as of now, it is still free, right? Next week is they're gonna introduce the requirements. I think $20,000, $10,000, right? I think we have it somewhere. Ironfx VIP. I'll find the landing page for you guys another time. But yes, come in here, click register, type in your email address. I'm just going to show you guys how to do it, right? So I'm going to do Desmond Ironman, right? Or something like that. That's at ironman.com. right? There's Ironman. I will show you how to register for it, right? Come in here, type in your password, register for it, and I'll show you some of the benefits of the VIP room, right? You need to agree to the disclaimers. Once you're done and you join the server, okay, let me show you some of the benefits, all right? You notice, yes, from next week onwards, yes, minimum deposit requirement will be $250,000, $2,000, right? So if you have this, take this as like a heads up to you guys. If you can, go join this week so that you know these requirements will not be kicked in. You will not have to have the minimum deposit requirements next week. All right, but you already have an account, that's great. Okay, yeah, be sure to tune in for this. Okay, I'm going to send the link to you guys, vip.ironfx.com/app/register. Okay, this is the link you're going to go to. Now, you will find me, you'll find Cassandra, you're going to find Annabelle, you're going to find Jean, you're going to find all of us in the live trading room. So that's the perfect place to be when you want to practice, especially Fibonacci, support and resistance, you know, your technical analysis, you want trading ideas, you want us to diagnose our trading strategy for you. That is the best place. All right, so go get access to that. Now let's begin today's webinar proper. Okay, I've given you the links, the previous things to watch out for. Right, in today's webinar, right, on Fibonacci retracements, we're going to touch about a couple of things. Right, of course, we're going to touch about the ideal market structure. Right, sometimes we think that Fibonacci can be used on every single market, right? But there are certain kind of market structures that tend to work better. Right, we have this little thing called Fibonacci trend line, which we'll be showing you the examples later, how to know that you are drawing your Fibonacci correctly. Okay, because the amazing thing about Fibonacci is that you can draw it wrongly, right? And a lot of people draw it wrongly, right? If you really want to dig into the roots of Fibonacci, a lot of it comes from Elliott wave, a lot of it comes from harmonics, right? So in today's session, we'll be just showing you the roots of it, right? How to draw it properly. Once you know how to draw it properly, you can actually, you know, if you have an interest in Elliott wave, if you have an interest in harmonics, you can then apply it in those forms of analysis. We'll be looking at different retracement levels. What are the key ones to look at? Is there one that is stronger than the other, right? Which ones do we look out for, right? So we're going to look at different retracement levels later. Go into a live practice session, right? So I'll be showing you, or rather no, Annabelle will be showing you, you know, how we can apply it on the live charts, right? If you have requests, do send them through. If you want us to look at a certain instrument, right? A certain instrument, or I see some questions coming in. I'll reply them in a bit. All right, certain instruments, and we're going to talk about how you can combine different Fibonacci retracements to find high probability levels. Okay, webinar will be recorded. I'm not sure if it will be sent through the email, right? I'm not sure how soon it will be uploaded. It might be uploaded 1 or 2 weeks later, right? Yeah, but yes, the webinar will be recorded. And yeah, no, you can't use Ironfx in the US. So if you're from the US, right, sit in, enjoy the webinar, but you cannot open an account with Ironfx. All right, guys. Now let's see. All right. Without further ado, I'm going to pass on the time to Annabelle. It's the first time, right, doing the webinars for Ironfx, right? So lend her your ears, right? I think click on this part here. Yeah, and lend her your ears, right? I'm going to move this part here. Yeah, lend her your ears, right? And what I really encourage you guys to do is ask as many questions as possible, right? We literally have another screen open here, right? where there's we're monitoring all the questions coming through. Thank you, Irfan. I didn't know you could send a heart emoji, right, when in the chat. But yeah, thanks for sending that through, right? Yeah, but today, and I'll leave you in the good hands of Annabelle. She's really mastered Fibonacci retracements, and she'll be diving she'll be diving deep into explaining how to use Fibonacci retracements. And please hammer her with as many questions as you can, and she'll do her best to answer them. Of course, go easy on her, right? Go easy on her, because you'll be seeing a lot more of her over the next few weeks, a lot more of Cassandra, yeah, or not. Yeah, if you hammer her too much, like, she might not want to come back, right? But yeah, you'll be seeing a lot more of her over the next few weeks, right? And yeah, I'm gonna pass on time to Annabelle.
Hi guys, I'm Annabelle.
Yes, yeah. That's right.
Yes, Desmond wants to test me. Okay, so I'll be going forward, I'll be hosting the session. So today we'll be talking more about the Fibonacci retracement. Hi, Irfan. Yeah. Hi. Okay. Okay, so for today's session, I'll be touching on one of the most important technical analysis tool called the Fib retracement. Anyone of the audience know how to use the Fib or has found it efficient? Hi, Joa. Okay, for those who are new, I will try to break it down as simply as possible. Yeah. So why do technical analysis traders use this tool? Fibonacci retracements are popular tools that traders can use to draw your support lines, identify your resistance levels, place stop losses, or even set your target prices. Okay, the ideal market structure. Okay, firstly, you need to know how to draw the Fib as accurately as possible, meaning to say you might need to adjust your time frames for a clearer market structure, like possibly maybe if you're always looking at the 15-minute chart, your market structure might not be as clear as a 1 hour or a H4 time frame. So if the lower time frames are difficult to analyze, maybe you can take a step back to get a clearer view. Okay, what we are looking for is actually significant swings in the market. So these are very significant swings, as you can see here. It's not messy. While as compared to these small insignificant swings, which are very choppy. So these are not very effective in providing an accurate Fib levels, since there are too many swings, too many swing highs, too many swing lows, and it's not efficient. So what we are looking for are these big movements when we create our Fib levels. Following the trend line. So I'm assuming that most of you know how to use or draw your trend lines. Give me a minute. I need to pull out I want to pull out the charts. Yeah.
Okay. Just click the Chrome.
Okay.
And then I think it's this one here. Oh, where are the charts?
Sorry, give us a minute while we pull out the charts. So maybe a quick refresher on how we draw the charts, how we draw a trend line. Okay, so trend lines are drawn like this. Maybe I can give you some examples. This will be the ascending trend line. We usually try to get as many points as possible for the ascending. And then this will be the descending trend line. So what do I mean by following the trend? Okay, so you can see that this Fib, let me just draw the Fib trend line for you guys. No.
Okay.
Okay, let me just pull out the charts. So for a Fibonacci retracement, usually we go from the lowest point to the highest point. So as you can see here, clearly, some technical issues. Yeah, let me just pull out the charts. Okay, so usually when we do when we want to pull out the Fibonacci retracement, we will put our first point, the lowest point, at the end of the week, and then we'll connect it to the top of the trend at the end of the week. So this is the Fibonacci retracement. Usually there are actually a few more pointers, like the 0.38 levels, the 0.618. So there are really a lot of levels that you can use, but we usually use the 0.38 or the 0.618. So how do we actually draw? Dustin, yes, there's a lower point. Maybe I'll get to that later. So here, I'm just using this time frame on the 4-hour and this section as an example on how you can draw the Fibonacci retracement. So what is the rule of thumb when you want to draw a Fibonacci retracement? So firstly, your line must be from the lowest to the highest point, number one. Number two, it must connect as many, it must be as close to your prices as possible. So you can't just draw, for example, okay, maybe this is not okay one. I would connect maybe here. Or even maybe here. Maybe here. This would be a cleaner one. This would be a cleaner. Okay, your prices have to be as close as possible to the trend line. So this is what we meant by the trend line. Or even like this. Okay, this is very clean. As you can see, your prices are still, doesn't deviate much from the Fib line, from the Fib trend line. What I mean by deviation is, for example, let's go to a lower time frame. Okay, for example, this might not be that accurate because you can see this is great, but when it comes down to here, your prices are very far away from the trend line. The deviation is too much, so your Fib levels might not be accurate, although the resistance level coincides with your 61.8, but it might not be accurate. So we wouldn't want to draw this line. Okay, so the rule of thumb here is that your trend line must be as close as possible to your prices and do not deviate too much from the price structure. Okay, let me go back to this. Okay. Okay, so Fib levels that works and have been tested over the years are shown on the chart here. So these are the Fib levels. These are all the Fib levels. Technically, it's between 0 to 100%, as you can see here. 0, 23.6, 38.2, 50, 61.8. Okay. There's even 78.6 or 88. So depending on what chart you're actually looking at and how you want to read your information. Hi Kurt, can Fib only be used on an up or down trend? Yes, Fib can only be used on a bottom-up or top-down retracement. It can't be used on a sideways movement. Is this what you mean by sideways? Okay, so there are a lot of Fib levels. It's depending on how you want to read your charts. So for example, if I go on a 4-hour time frame for the yen, okay, I would draw my retracement level this way. Okay, maybe not. The deviation is slightly too much. Maybe I'll draw my Fib level this way. Yeah, I'll draw my Fib retracement this way. So between 0 to 100, this is a Fibonacci retracement. And you can see that it's going back to test the 50%. So once your Fib level breaks any of these levels, is considered as invalid. So now it's going back, you can remove the 38.2 and the 23.6. So now it's only testing the 50% resistance. Okay, so as you can see from the chart here, like I've mentioned, for Fibonacci retracement, usually the levels are between 0 to 100. But there can also be some retracement that goes beyond the 100% at 127.2 or breaks my 0% to go into the negative, minus 27.2 or minus 61.8. So those Fibonacci retracement levels that goes beyond the 100% is called the Fibonacci extension, while those that go below the 27.2%, negative 27.2%, is called the Fibonacci expansion, which Desmond has mentioned just now. But this will only be covered in our next 2 sessions. So as you can see here, if you draw a retracement point starting from here downwards, you can see that it goes to the negative. The prices actually breaks your ending point and goes to negative 27.2% to test this level. So technically, all your 0 to 100% Fibonacci retracement levels are invalid now because we have come to the expansion zone. So that's another technique that we will learn. As well as this Fib levels that goes beyond 100%. For example, if you put your point here and then you retrace and it goes beyond your 100% level and it breaks it, your 0 to 100% Fib retracement level wouldn't work. And then now we are going to the extension and test at the 161.8. These are all covered in our next 2 sessions. So what we have here is usually Fib retracement wouldn't be used as a sole tool to chart your trend lines or your channels or to set target prices for your trades. We usually combine your extension, retracement, expansion, and projection, all these tools together to make your information more accurate so that you can enter a trade or exit your positions. So Over the next few webinars, we'll be covering that and how you can combine all together the expansion together with what you have learned today to make it more accurate. So what are some of the common questions that I have seen? Some common questions will be, for example, where to draw your starting or ending point, as Dustin have posted, but there are lower points. Okay, let me address that. Okay. So yes, if we look, let's take a look at our USD JPY daily charts. Yes, there will always be a lower point as you move on, as this is an ascending trend line. So yes, there will always be a lower point. So like I've mentioned before, to make your chart as accurate as possible, the line must be drawn the closest to price. So your prices shouldn't deviate too much. For example, okay, this, let's say, for example, this is the lowest point in this daily frame. Yes, this is the lowest point, and then this is the highest point, but you can see that maybe this is not a great chart because your prices here deviate quite a bit from my Fib trend line. So this might not be that accurate. What you want to draw is perhaps maybe something closer here to here. I would take this as quite a clean and accurate Fibonacci retracement. So to address the other question, where to draw your starting at any point, usually we will draw your starting point at the end of the week and the end of the Fib line at the top of the week. So let's say, okay, take this for example. Give me a sec. Let me remove some of them to make this clearer. Okay, so for example, we usually draw from the end of the week to the top of the week. The reason being, so this is the daily chart, right? If you move back to a 4-hourly chart, it's still very accurate here and here. If you zoom back to 1 hour, it's still very clear. Okay. Even if you go to the 30-minute, it's still very clean. It still touches the endpoints. But for example, if I draw let's say at the closing price, okay, this might not be good example. Let me find more obvious ones. If I draw maybe, okay, this one, okay, this is good. This is a good example. Okay, on a daily time frame, let's say if I draw my Fib level here, okay, this is quite a clean line. Yeah, I took the closing price and the closing price. So instead of placing my price at the end of the weeks, I place my points at the closing and the opening price point. Let's see, okay. So you zoom out. Okay, this might be a bit far. Zoom out. Okay, you see your price. The prices might deviate already because you see your prices might deviate from where we originally put, which is here. So that was a daily chart, and this is the 4-hourly chart. If I zoom up further to the 1-hour chart, it will deviate even further. Just give me one sec. Yeah, it will deviate even further. This is what I meant by you should always place your, you see, from here by right, this should be the right way to start your Fib retracement level. This is the point that you should be putting instead of at the closing price. This is how much deviation it has, which is totally unreliable charting already. Okay. So this is to address the question of where to draw your starting at any point. So we usually draw at the end of the week, at the tip. Okay. Okay. Let me see. Jason, over what time period would you look at? Okay, for Fib levels works on most time frames, but in my opinion, I think it works better on higher time frames, meaning above 1 hour. Because the reason being, if let's say you go to your lower time frame, yes, you can draw. I'm pretty sure I can draw a Fib retracement easily. Okay, so the tip to the tip of the wick. Okay, so this is the retracement. For example, or maybe perhaps here. Okay, this is more accurate. Okay, because what you have learned today is that you have to draw your Fib retracement as close as possible through your prices. So you try not to deviate too much like this. Try not to deviate too much like this. So this is too much deviation here. Okay, we try not to do that. Okay, so over what time period? Yes, I will look at the higher time frame because this is a 15-minute chart. Okay, I can draw this trend line, but if I zoom out, it might not be that accurate anymore, and it wouldn't cover as much information as I can get. So usually what I will do is I will go to the higher time frames, like maybe daily. I'll try to chart, and then I'll zoom out to the 4-hourly or the 1-hourly. 15 minutes, 30 minutes, you can chart them, it will work, but there might be too much noise going on. You see, it might be harder for you to get your market structure right, or your trend lines. It might be a bit choppy, like here, or even your 5 minutes. See, it's very hard for you to gauge like where is your lowest or where is your highest, and it's very, very choppy. So usually I would do above the 1-hour time frame. Okay, Irfan commented, to make it short, it's like when we see an uptrend. Okay, so let's see. So when we see an uptrend, we draw from the lowest point of the week. Yes, correct. To the top of the week. Okay, yes, correct. Great comment, Irfan. Yes, this is what we do, how we do it. So usually when we chart the Fib levels from the lowest to the highest, or from the highest to the lowest, for example, it's trying to make you understand where is the next resistance or next support that is going to test. Okay, so for example, this. Okay, this is a bit messy, sorry. Okay, I'll do one by one. So from the bottom of the week to the top of the week, this is the ascending trend line. So this will let you know how far it has retraced and which level it's going to retrace or test next. So for example, in this case, it might go to the here. So it hasn't broken the 61.8 level. It hasn't broken this 61.8%. level. So this price might actually come back here to test, or if it breaks, then it will go to the next level at 0.786 here, 78.6% here. Okay, and then the other example from the top to the bottom. Okay, so descending trend line from the top to the bottom, it retraces pullback, and then now it's coming back to test here at the support level, 23.6%. So yes, FIB helps you to understand your support and resistance levels so that you can better place your prices, or to take your trade or to exit a trade. Okay, so I have come to the end of my webinar. Thank you all for being so patient, because it's my first session and I'm slightly nervous, but I hope I have answered or addressed all the important or necessary pointers, characteristics of a Fib retracement charting. So all this will be recorded, and you can actually log on to the Ironfx page. Let me just pull up. Thank you, Irfan and Dustin, very supportive. Okay, so you can actually go to the Ironfx page, go to the past webinars. In a couple of minutes, or probably tomorrow, it will be under the past webinars, where you can actually thanks, Shua, where you can actually rewatch all these webinars if you have missed any, or if you want to refresh your memory. Okay, so any more questions from the audience? Okay, thanks, Busani. Thank you. Juha, when will be part 2? Okay, part 2 will be, let me see whether I can find it on the web. So as Desmond has mentioned, tomorrow will be tomorrow should be the live trading session with Cassandra or Desmond. If I remember correctly, the part 2 will be next week, on Tuesday, on Wednesday. I can check and let you guys know again. Ryan, is there an area that has high probability of retracement? Okay, to answer that, high probability of retracement, Ryan, would be, there's no hard and fast rule for this. So to answer that question, I think, in my opinion, to draw a really accurate Fib trend line, Fib retracement, right? So long as there's a trend going on, and then you can find a very clean, like this, from your bottom of the wick to the top of the wick, a very clean and not so deviated, prices are not so deviated from the line. I think this is considered a good and accurate Fibonacci retracement. So along with this tool, like I've mentioned, there will be others such as the extension, expansion, and projection. Solely this tool might not be a very helpful analysis. You have to use all the 4 tools together to make it as accurately as possible. Yeah, hope I answered that question. Kurt, could you do a live Fib analysis on CAT? Okay, I can try. CAT. Okay, let me see. CATs. Okay, let me see. Okay, what I usually do is I like to go to the daily chart first before I narrow down or go downward into the lower time frames. Okay, overall it looks like it's on the ascending trend line. It's upward bias, bullish. Okay. Although I can see like maybe a lightly double top. Okay, prices are rejecting here. Okay. Okay, let's go to. Okay, this is slightly choppy and slightly ranging. I wouldn't think a Fib retracement here would be a great choice unless it's paired with your extension, expansion, and projection. Because like the key to drawing a retracement, right, is being a very clean, but a clean chart. But here it's too messy for me to draw any. So honestly, I wouldn't chart it here. But if I were to chart it, I will probably chart here to here. This might be quite clean as we are looking for the significant movements before we chart anything. This is quite significant. Prices don't need. Pointer one is we look for significant swing highs and swing lows. Number one. Number two, we are looking before we chart the Fibonacci retracement, we also want this line to be as close to my prices as possible. So if you were to do this, I wouldn't consider it a very clean chart, but this I think is quite clean because your prices don't deviate too much. Okay, so this currently your I would say it's currently testing your 23.6 support level. So if prices come here, for example, it comes here and it breaks this, it will go further to test on your 60. Yeah. Wait, give me a sec. Yeah, it has broken the 38.2, so I would remove this. So yeah, if it reverses here, if it reverses here, then it will come to test at, okay, 50% might be a bit far. So I will come back to test at the 38% level first. So if price reverses here, it will come back to test here first. If it breaks, then it will go further to test this level at the 50%. So to answer Kurt, this is how I would chart my how I would chart this instead of oops. Yeah, so to answer Kurt, this is how I would chart my Canadian dollar Swiss francs. But it will be better if this tool is used together with extension, expansion. because on its own, it might not be that accurate. But yes, this is how I will chart it. So if price reverses here, it will come back to test the 38.2 level. And then if it breaks here, it will test at the 50%. Else, if it goes downward, it will be testing this key level here. So depending on other factors, this would possibly be looking for a breakthrough or a bounce at. Yes. Break or bounce off. Okay, hope I've answered your question, Kurt. Okay, so thank you again, everyone. As we are coming towards the end of the session, if you want to rewatch or re-listen to today's session, you can actually still log on to Ironfx under the past webinars later on to rewatch or retune in for a refresher course. Thank you guys. I'll see you guys again next week for part 2 of 4 for the Fibonacci retracement.
My name is Christina, and today we will talk about the Forex spot rate. The Forex spot rate, or FX spot rate, is the costs for selling one currency to buy another for immediate delivery. There isn't a one spot rate, but two rates or prices when opening a trade. A trader can buy at the ask price or sell at the bid price. The exchange rate for a currency pair usually refers to the mid price, which is the average between bid and ask. The exchange rate on a spot FX transaction will be higher or lower than the average price, depending on whether it is filled at the bid or ask price. While large players in the interbank FX market, such as banks, have the power to negotiate and change market bid and ask prices through trading activity, smaller players, such as retail trade, are more likely to have the price they are offered. For example, business and individuals trading currencies through a bank or broker will be quoted a wider spread than the interbank market spread. When we refer to a spot transaction, we don't really mean instantly, but on the spot, in other words, on the settlement date. The settlement or value date is the date when the funds are exchanged. This happens 2 business days after the transaction or trade date. This is stated as T+2. Some currency pairs have different settlement dates. For example, the settlement date for USD against CAD and USD against TRY is 1 business day later than the transaction date, or T+1. The Chinese yuan and Russian ruble can both settle on the trade date, or T+0, though it is usual to be settled 1 business later, T+1. When we mention business days, we exclude Saturdays, Sundays, and legal holidays in either currency of the traded pair. Spot FX traders may have a settlement date, but most traders don't want to settle. Since traders want to profit from exchange rate differences on their transactions, they choose to roll over transactions on the settlement date. To do so, they close the transaction at the closing price and reopen it within the next day's opening price. This allows them to extend the settlement date by 1 day. Usually brokers do this automatically. This type of FX swap, which is used to roll over position, is what is known in Forex as the tomorrow next or tom next. This involves simultaneously entering into buy and sell traders with settlement 1 day apart. Thank you for watching.